It's Friday and you're watching FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Luke Falasca give us a broker update. We also have Andrew Cox with us. He's going to give us an update for the DHL Supply Chain Pricing Power Index. But first, we're going to go to Zach Strickland with Carrier Update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to this Friday Carrier Update presented by PowerFleet. I'm Zach Strickland, and today we continue to see those outbound tender volumes drop well below that 10,000 break-even point that we started at in early March. As the coronavirus outbreak really got going, we were sitting right around that 10,000 point. Now we're sitting about 5.5%, 6% lower than that at 9,400. So not the greatest of signs. It continues to drop pretty quickly. We're not really seeing it slow too much at this point, so that means that we could potentially see a sub 9,000 number by this time next week. So that sub 9,000 number would be one of the lowest values of non-holiday outbound tender volume index that we've had since the inception on March 1st, 2018. So pretty big deal if we start to drop below 9,000 during just the regular day. Now, something we do have to account for though is that it is Good Friday, and that means that we should see roughly a 3 to 5% decrease in volumes just seasonally, based on the fact that a lot of operations do shut down for that Good Friday holiday regardless. So we do anticipate another 4% off this, which would bring us right down to that 9,000 level this time next week. So again, everybody should be aware of that. Of course, most of you already know that in general, so you should have already seen that coming to this point. So what's happening with capacity? 6.84%. We are dropping rapidly on the outbound tender rejection index nationally. Dropping well below that. It looks like we are going to break through that 5% barrier, which traditionally is around what we see in an even or, kind of a somewhat flat market that we saw. February was around 5.3, 5.4%. So 5% is a very soft, very loose market. A lot of capacity available. Tender rejection index continues to plummet through those levels. So what's it look like in the rest of the country? So we got out here we've got the outbound tender volume weekly change number, and the blue markets are going to be the ones that are growing week over week, which you can see very, very few of those. Not a lot of markets growing out there in the country right now. All these red markets and some of these whites, if you look down here at the scale, negative 0.59. So that means that we've had about a 0.5% decrease week over week in terms of tender volumes. Some of the markets that are of interest, however, the Minneapolis market, one of the larger markets in the United States. We talked about it earlier in the week. Not necessarily a huge market, but about a 0.9% market share, which is good enough to put it in the top 50 or so markets in the United States. So it is pretty significant to note that that would be one of the growing markets in the United States. But around here in the mountains, these are smaller markets. Week over week increase is not that hard to do, especially when you only have, you just don't have the freight density in these areas of the country. El Paso continues to show some interest, again down there along the border of Mexico, a good market. A lot of automotive coming out of there, but not this time of year, so it's probably a little bit of seasonality in terms of produce shipments and whatnot. Now, we don't know that for sure, but again, an area to watch because it has been one that has been a little bit more volatile here of late, especially in the West Texas and the New Mexico region. So looking at the market volatility over here, strong increase from Albuquerque, as I was mentioning, North Platte, Nebraska, Shreveport. Again, not huge markets showing increases in terms of outbound volatility. Moderate increase in Shreveport. Nothing getting real out of control over here just yet in terms of volumes. These are some of the smallest markets in the country. Now Richmond, right around a 1% market share level, showing a little bit of an increase as well. So anybody operating in those markets today should have some reliable volumes week over week. Rare sight in today's market. Looking at the weighted rejection index, Minneapolis, Minnesota, as I mentioned earlier, topping the chart there. Now, a lot of that has to do with the fact I've got the outbound tender rejection index for Minneapolis pulled up over here. It is coming off a pretty significant dip last week, so that's what it's pulling up off of, but tender rejection rates are increasing still. Again, a very rare sign in today's freight market as everything else is coming down. So anybody operating out of Minneapolis here over the next couple of days should be aware of the fact that we are seeing a little bit of stability in this market in terms of volumes and a little bit of destabilization in terms of capacity. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everyone. I'm Luke Falasca bringing you another broker update. And we've seen volume levels continue to slip as well as rejections. Things are getting very soft out there. Capacity is getting very loose, right? So, but that being said, there are still always areas of opportunity, which we'll go into. That being said, let's go ahead and look at the chart. So the blue line is the overall volume level in the United States right now. We've seen that number continue to fall. We've actually broken below the 9,500 level on the index scale, which is very, very low. It's actually the lowest we've seen volume in nearly 3 months. So that number may continue to fall as less and less freight is moved. That being said, we'll keep an eye. There will be opportunities here, so this isn't the end of all hope. There is still plenty of opportunity as volume continues to fall. Now the yellow line is reefer volume levels. I've gone ahead and thrown those up there as we're really starting to get into produce season, so we'll keep an eye on that. But that yellow line is also falling. You'll see it on the index scale over here. It's just under 1,400. So that's actually gone back to the levels of where we were right before this big surge happened. Both dry van and reefer volumes are a little bit below where we started this surge at the beginning of March. So they're below those levels right now. We'll see if reefer holds. I suspect reefer might hold up a little bit better, but we'll keep an eye on that. As far as rejections go, I've gone ahead and put this up. So the blue line or the blue mountain, which is very difficult to see, that's the overall tender rejection in the United States. Now we've broken it down. The orange line is dry van. That tracks very closely with the overall number just because there's so much extra dry van freight moved compared to other modes like flatbed and reefer. So that's dropped to about 6.8%. Just 2 weeks ago, it was nearly at 20%. So we've fallen quite heavily just in that short period of time, and we may continue to drop as capacity loosens. Remember, this will drop spot market rates. So you will start to feel spot market rates low. So if you're not winning freight from your shippers, it's probably because you're bidding too high. And this is why, as those rejections go down, you'll have to bid more competitively. On the flip side, you'll also have to push carrier rates down in order to create margins. Now this green line here, those are the reefer tender rejections. We touched almost 30% about 2 weeks ago, and now we're at 13.5%. So while it's fallen quite heavily, it has not fallen quite as much as the dry van rejections. And then flatbeds, that purple line, didn't really see that much of a surge like the other ones did. It kind of only went up to about 10%. Now we're sitting at 3.2%, so that's fallen down. Not a lot happening in flatbed right now. As far as the map goes, this right here is the dry van weekly volume change. This is over the last 7 days as of this morning. You can notice there's a lot of red out here. The markets in red are markets that are contracting. There's less volume there. Definitely overtakes the map by sure. The blue markets are where volumes are actually increasing. So there is plenty of opportunity out there. While there's not that much when you compare how big the United States is, there's still areas of opportunity. There will always be blue markets out there. And then the white markets are fairly unchanged, not much changing on a weekly basis. The markets that I would focus on here is this Minneapolis region. There seems to be a lot of freight moving out of there, which is a really good sized market, as well as the Richmond, Virginia area. There's a lot happening there, and El Paso, right there on the border. So keep an eye on those markets. There's a lot of freight. This mountain region here is growing, but there's not a lot of freight there. So I'd focus on Minneapolis, Virginia, and then also El Paso for some extra freight today. As far as rejections, let's go ahead and look at El Paso. The blue line is the dry van volume levels. Look, they haven't really changed. This is since the beginning of March here, and you can see they're pretty level. We've actually surged up. We're almost at a high right now out of El Paso. So keep an eye there. It's definitely an area you want some customers right now. And then the green line is the rejection rate. So we saw those rejections dip when we saw this little dip in volume here at the very beginning of April, but they've since surged back up. They were only 3 days ago, they were at 9%, and now we're at 21%. So you're really going to need to increase spot market rates out of El Paso, and capacity is going to be tight. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your DHL Supply Chain Pricing Power Index update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, we've had a power grab by the shippers this week. We're 2 weeks off of an all-time high where we sat at 65. We've fallen 20 points in 2 weeks, 15 points this week, down to 45. So the shippers are now beginning to take control of the pricing power. And this is because we've just seen volumes fall off a cliff. We were kind of expecting this. We knew that there was a pull forward from a lot of the consumer packaged goods buying and the hoarding of food even in the late weeks of February into early March. But that has completely changed. It's taken us half the time to give back all of that surge in the outbound tender volume index, and it did to rise. So again, we've been up and down 26% in the matter of, we've been down in the matter of 16 days.
Right, and you just mentioned it there, a lot of the consumer goods, and there are a lot of factors at play, right? So we're looking at that panic buying that we saw earlier in March. Now the conditions are a little bit different for consumers, right? We saw jobless claims really spike up. That's really going to take a hit for discretionary spending.
Yeah, I mean, it's changing the American psyche. Whether or not you've lost your job, you have it in your mind that 1 in 10 working Americans has lost their job in the last 3 weeks. That's why I don't believe there's really a floor in sight for volumes. Not only do we have people losing their jobs, so they'll be less willing to spend money, but all of the factory, or all of the retail places where they would spend their money are closed. In 2 weeks, more than 50% of all small businesses in the U.S. will be closed. Small businesses move a really significant amount of freight in the U.S. So, I mean, you can see where this blue line is this year, and it's cutting right through our 1 year and 2 year comps. I think we're going to fall significantly even further through that and drag along for a couple months. So volumes are going to be really rough. The worst is ahead of us on the volume front.
Right, and you just mentioned it, right? A lot of manufacturing companies are really starting to struggle right now because their doors have been completely shut. I mean, if they're considered non-essential and they can't convert to medical equipment, like we hear so many other businesses being able to do, they're not going to be able to move any freight. And even if they were, businesses aren't investing right now.
Yeah, the truth is that we've heard these stories of companies, repackaging their goods and changing over their factories to make PPE or to make ventilators, but that's only really the biggest guys. You know, we hear from Tesla, GM, GE, really massive companies that have the ability to do that. But the truth is there's thousands of other smaller shippers that, one, don't make goods that are anywhere, they don't make things that would allow them to change over, but two, don't have the ability to do so. So most shippers aren't making things right now, and that's why I just think volumes are really going to fall. We've heard, Craig Fuller and some people around the office, they think we'll see Christmas Day levels here in the next couple weeks. I don't know if I'd go that far, but I think volumes are really going to fall, and with them is capacity. Capacity is moving in kind with it. This is our outbound tender rejection index, our measure of capacity, and in the we've been 9 days since the peak, and outbound and OTRI has fallen 60%. In that same period, it rose 43%. So again, same with volumes. The environment that came to us is leaving us quicker than it came.
And so with all that capacity kind of leaving the market and the volumes coming down, expectations of shutdowns of some of these small carriers?
Yeah, I mean, I think that a lot of carriers are going to be pressured by their shippers to push down rates, and by their brokers over the next couple months, along with insurance rates. All of the things that were at play where we thought there would be an acceleration of closures pre-crisis, they're still at play. We still have insurance levels very high, costs are going up, but now on top of that, we have volumes falling through the floor. Right. So yeah, I do believe we'll see an acceleration of company closures and failures, which might pull some of the capacity off the market down the road. That's why we believe in our 3-month outlook that we'll have more of a balanced market here in 3 months. But the truth is right now is that the worst is ahead for the carriers. That was actually the title of the Q2 carrier outlook that we published just yesterday. They're going to have a rough go at it for the month of April and probably for the month of May as well.
Right. Andrew, you just mentioned you're putting out a report, right? So where can people find more of those insights?
So people can get it at freightwaves.com/passport. They can also just scroll all the way down to the bottom of freightwaves.com. All of our articles are there with a short summary. If you want to read all of it, you can sign up for Passport at the same link, freightwaves.com/passport.
Awesome. Andrew, thank you so much.
Welcome, sir.
Thank you so much for tuning in. That's going to do for this update for the DHL Supply Chain Pricing Power Index. Be sure to tune in next week for the latest. That's going to do for this Friday edition of FreightWaves Now, but the content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves TV app on all your favorite streaming platforms. Thank you so much for tuning in, and we'll see you on the next episode.